Great everyone, Les here from BG Trading, and I hope you are well. Today is 12 of July 2023, and I'll be analyzing once again ZIP, which the SX code is ZIP. This is a buy now pay later stock that has been incredibly profitable for us. In fact, we've done our best trades at BG Trading with ZIP. We pay a lot of respect for this stock. Great trading stock, okay? Which again is completely different from great quality company. We're going to look into the business model in the first part of this video, okay? Now, the company goal is to become cash EBITDA profitable by FY24, the first half of FY24. Let's understand exactly what that really means from the business context. Does that mean the company will be profitable? Does it mean the company will have a positive cash flow? They are completely different things. We're going to exploit that. We're going to see all the green ticks that leads to potential stock price growth in the next 6 to 12 months. But also we're going to look into the red flags, the big red flags that we see here with this particular stock. In fact, if ZIP goes through this which is the worst part of this monetary tightening with really high interest rates in a sustainable level, whatever comes next probably will be a lot more positive for the business as interest rates start to be cut by central banks around the world as a result of this huge monetary tightening that we have seen over the last 12 months. So let's have a look. Remember, this is not a financial advice, and I also like to invite you to become a member of a free Facebook community, Buy, Grow, and Sell Strategy for Share Traders. If you're not a member yet, it's free. Jump there. We post a lot of great quality content and potential buying opportunities, discussions with our members right there. I have put together this stock analysis based on the latest quarter update, which was the third quarter for financial year 2023. And the idea obviously is to track the company performance not just year on year, but quarter and quarter, and understand whether really what the company promise, the management promises, is actually reflecting into the numbers. We have seen growth across most of key fundamental metrics, which is good, with revenue, with group quarterly revenue growing 15% year on year, with total transaction volumes growing 9% year on year, with total transaction number also growing 12% year on year. And an interesting metric here is a cash transaction margin, which has also improved despite high interest rate environment. It used to be 2.5% back in FY22 at the same period, and now is 2.8%. It's like an improvement. Obviously, as you know, if compared to other business, this is a very low margin, and that's why a ZIP really needs a high volume transaction in order to be profitable, to make money. So another positive aspect that has showed a very strong growth revenue in Australia and New Zealand operations, with 23% year on year growth revenue, and also a decrease of credit loss rates, which was 3.7% in the same period financial year 2022, and this period in financial year 2023 has come down to 1.2%. This is a very important metric, guys, and that's some of the things that we need to be looking at as well when we're analyzing the company. Now, the key goal for ZIP is, and that has been promising to the shareholders, is to be profitable, EBITDA cash profitable by first half of 2024, which is what the market is expecting. But it looks like, as per the chart formation, looks like the market really wants proof of that. And obviously, ideally, they want more quarters that will lead to that conclusion. But meanwhile, when we are waiting for the full year result for ZIP, which probably going to be announced in later July or probably August even, then that will give us a solid guidance of what exactly is happening with the company. Now, just a red flag here. ZIP is likely to be EBITDA profitable by first half of FY24. However, it doesn't mean there's going to be net profit for the whole group. The statutory position probably going to be a loss still, because EBITDA doesn't count really for things like tax, depreciation, and amortization. This is still going to be a net loss company, very likely for at least the whole FY24 and potentially even for FY25 as well, despite to be EBITDA profitable. Okay, so just keep that in mind. How would the market react to that? I'm not 100% sure. We need to see that really, and then obviously that will be the ultimate conclusion. But for me, really, is the market reaction could be positive if we have a FY23 second half in line to the loss was made in FY23 first half, which is still in combination to that will be a lot lower than the statutory loss that was declared back in 2022, which was $1.1 billion. We probably will see something around $400 million. That's my guess here. Let's see if I get this right. Hopefully not more than that, but that will be a positive result already. Obviously, a lot of the EBITDA doesn't count for one of costs as well related to divesting or fines for a failed merge with or failed acquisition from Sezzle. We still can see a lot of one-off costs down there, and that's what keeps putting people off of this particular stock for the long term. But the key thing together, even if those metrics comes positive or better than expected, I don't think that will be enough for the stock to bounce and keep in a higher level for a sustainable period. I think the key metric is the key issue with ZIP at the moment is to do with the macroeconomics, is to do with interest rates cycle, and that's where most of the investors are going to come back once we see clear signs that interest rates are at the peak, or have a pivot, and when obviously and then potentially improve on the share price when we see clear signs that we might even have interest rates cut. That's really when the rally will start on my position, provided obviously the financial is positive. The problem here, and then obviously I have to admit, my projection for interest rates was in line with most analysts, between 6 to 8 interest rates hike back last year for inflation, but obviously inflation is a lot stickier, and then we are now, even the most pessimistic analysts was tipping for 10 rate hikes. We are now 12th here in Australia, and potentially going to see 13th or 14th interest rate hikes until the cycle ends, and then we start see a decline, and that's when we will see the turnaround. In my opinion, obviously, that's when we should see the turnaround on the share price. But my job here is to bring the stock before it has rallied, because once it has rallied, there's no point putting a video out here because people would have already missed the boat. So now let's jump into the technical aspect, the chart formation. look again what's happening with the chart here and why has been a little bit disappointed into our last trade. So now, obviously, we like seeing a stock trading sideways into accumulation mode, sort of speaking, in order to suggest that we're going to have a strong reversal. If you watch my last video, which I'm going to be putting right there about ZIP, we saw there was a triangulation, descendant triangulation. You could see a potential breakout, and I mentioned that we might see a potential breakout and immediate reversal, which we saw here. There could be an immediate reversal, but the reversal failed to continue, and then the share price now is trading at the not only 52 weeks low, but it's a very low level here with this breakout or hypothetical support. But again, if you've been following ZIP, you know that ZIP doesn't really follow the most classic technical analysis indicators. I've seen, like, trying to guess hypothetical supports and hypothetical resistance levels never really worked with ZIP. What we look into when we want to trade ZIP, want to buy ZIP, is we display on a Heikin-Average, and we look for potential reversals. And that's how we made most of our money back in 2022 here and 2021. Look, this was a rally. By memory, we definitely did over 100% profit on this trade here, which we had a rally of 290%, where the stock rallied from all the way from 40 cents, really 43 cents, the current levels, all the way to $1.70. Which could happen again. Yes, of course, could happen again, especially if ZIP's in a much better position than it was before, and if the economic cycle is shifting from the worst for this type of company. Of course, could be again. But we still, every time we have the last few indications, it didn't actually happen to be completed. But then how we traded ZIP back in 2020, 2021, and 2022 was, I'm going to explain here. We saw this high volume start building up from the Heikin-Average, green candles, as you can see here. And then the candles trading above the EMA 9, above the yellow line. And that's when we start jumping in. We jump straight in there as a result of a bullish intersection level 2. Again, if you haven't done our course, bullish intersection level 2 means the green candle crossing the yellow line, the EMA 9 indicator, and then keep trading above that level. And that we just hold there until we see a pullback. And there few chances to trade last year as well. Then after 43% opportunity here, but then wasn't that clear. But still, we could see the candles trading above the yellow line, and again, candles trading above the yellow line here. And then we have this not enough range for a good trade. Back in like this year in 2023. Unfortunately, the trading behavior of this particular stock has completely changed, and but we could see some share price action again, and especially knowing that the liquidity levels of ZIP is not that great, and as soon as investors and retail investors and institutional investors see some potential rally, everyone's jump in like a crazy, and that's when we have those huge rallies there. But then, look, I will be looking to buy ZIP right in a similar formation like this. Start seeing some green candles on a Heikin-Average. Again, obviously this one failed, but we probably will see another formation here. It looks like it's stabilizing. The share price is stabilizing around 40 cents. Still early to say, but we want to see another green candle formation. And if that happens, obviously that could indicate that we could see a reversal, and then we're gonna see it will be a no target until we see those green candles becoming a red candles again. But this is the way, this is the best way to trade ZIP. If you're looking at trading ZIP, for us, it's not a long-term investment stock. We only look into this particular company as a trading opportunity. Remember that, not talking about, and could go all the way above, even go above $1, but I don't think it's gonna go to $10 or $12 again until the company becomes really a real a profitable company. But it still is much more diluted than when it was trading at $12. So it's gonna take years and years, potentially never even reaching those levels again. We don't know. We never know what's happening. If the hype comes back into the market, interest rates start going down close to zero again, which I don't think is going to happen. But if it goes down and liquidity starts popping back in the market, we probably could see ZIP going really high again as emotions take over the actions, and stock traders start FOMO into whatever stock they believe could go really high. Okay, this is my position on ZIP. Haven't seen a reversal yet. We might see here with a green candle open a potential green candle no Heikenach and some building up on trading volume to the upside, but we haven't seen it yet. Until we see that, I'm not going to jump back, but once we see that, then that's when I would be jumping back for chasing at least 20 to 40% profit on the next trade on ZIP. Hope that was valuable. Let me know what you think. Again, this is not a financial advice. It's just how we trade using BGS20 strategy. Okay. I'll see you in the next video. Bye.